In fintech, we rely on deterministic systems. But the second part, which is more important, is the governance of AI. What I see when I see and meet founders, they do not understand the regulation. They do not understand the security. They need to start understanding the security, the regulation, the compliance.
One opportunity in Fintech 4 on which someone can build a new startup.
Now, there will be changes to the way biometric integrates with fintech. It has not been as successful as people would have. Everybody who is getting into AI and fintech, they need to focus on all these three things. In individually, they are not useful. If your speed is important, how do we optimize it for speed? But at the same time, we do not compromise any of the compliances, regulations. If you find your transaction failed and certain app, next time you will think twice, thrice whether I should be doing purchase from that app or I should go for another app.
Payment has become so smooth. Why do we hear these 4 or 5 days for the refund, Krishna?
You are into a world where every line you write is impacting the funds movement, money movement. This is much more regulated industry than many other industries. Professional is concerned, if it is a senior professional, they need to understand the domain. If they want to get into engineering, they need to focus on architecture and sustenance.
Embedded finance is one of those topics which come up in every fintech discussion today.
Yes.
And with the fintech, while the finance is becoming more invisible, technology is becoming visible, and how that's creating impact on trust. That's what we would be discussing today with our guest, Krishna Potnis, who has spent decades building global technology systems enabling the payments. And he has worked deep into intersection of central banks, EMV labs, and the card payments. Today, Fintech Advisor. Welcome, Krishna, to our podcast.
Thank you, Chetan. It's pleasure to be here talking to you about fintech.
Glad to have you here, Krishna. So, Krishna, when someone asks you today on a dinner table, what do you do? How do you respond?
So I say I'm a fintech architect. So as you see, there are a lot of fintech systems that we are using today. We recognize these by apps, but there are a lot of things happening under the apps, whether there is a regulatory, there is fraud, there is risk management, there is interfaces, integrations. So a lot of things happening. And because of the speed requirement, it starts to get small cracks into these systems. And before these cracks become bigger, I come into picture. I make sure that those gaps doesn't widen. I make sure that these gaps are addressed at the start itself, because all these systems, fintech system, don't fall with a loud noise. They silently fail. And we want to identify those silent signals and make sure that system can scale and system do not fail. So that's what I do.
Get back to start of your career. I understand you started your career building GSI application for a Japanese customer, and we all know for Japanese quality is something which is not talked about. It's by default, right? The level of details is inbuilt. So how did that experience created that engineer Krishna, which then continue his journey on a fintech world?
Absolutely, you are absolutely correct. As far as discipline is concerned, Japan discipline is at top there, because the way the rigor that Japanese people have, whether there is a systems, whether there is a thought process, whether day-to-day working is very, very commendable, and we have to learn from them. So during that stint, after coming out of university, I joined this company in Pune, where we used to build GIS systems for big giants in Japan. And we were building map technology, taking the data from geographical information systems, from satellites, and generating maps. At that point of time, we didn't have any Google Maps or any of such things, not even any satellite navigation. So there used to be handheld devices from these giants where map used to get downloaded for local areas. So that's where I started working, and that was a very interesting journey as well, because as you said, Japanese regime is very, very focused on quality. And when they talk about the quality, there are strict instructions that every 1,000 lines of code, I have to publish, you have to publish 100 defects. No questions asked. You can publish more than 100, but cannot be less than 100 for every 1,000 lines of code. So before even test-driven development and all these mechanism came into picture, they were already doing this implicitly with these kind of guardrails, which implicitly make sure that the quality is good. So as an engineer, it rewires you for quality, for finding issues from the start. So when we design the application, we start to design the defect cases. What are the defects I'm going to publish to my Japanese client for every 1,000 lines? It's a pretty good density of defects that they expect. So that rewired my brain, looking for issues, looking for quality, making sure that quality is good enough. Yeah, and it's not working okay, working good enough. That doesn't work with Japanese. It has to work or it won't work.
So that's very interesting. You mentioned about hundreds defects in 1,000 lines of code, right? So,
Yeah.
what does that really mean? What if there are no defects?
There is no such case as I would put a Japanese team members. We used to have a team member in Japan as well. As they would say, there is no way that there is no defect in your code. There has to be a defect. If there is no defect, that means you are not thorough enough. And if not defect, you have to find defect and you have to generate defect. So they thought defect is like a test case. So consider it as a test case. Yeah. So they are looking at from the other way around. When we create a test case, they think of a defect. So that actually is the test-driven approach. You, without writing any code, you try to test the functionality. It will not work. Now you implement some functionality. Now you test. Then next test case, next test case. That's how the TDD, the test-driven development happens. They did the same thing with the density of defects predefined. So you have to generate 100 defects. So that means you have to be inside your code and finding the defects. And
Interesting.
sometimes even you don't have defects, you have to create defects. That's an interesting way to think of it. Yeah.
Yeah. So, Krishna, this podcast is about impossible transition, and every guest who come here, he has made a transition which sounds extremely difficult, not impossible. And yours moved from the GIS application to the world of fintech, and that too not at the surface level, going deep into it. What are one or two most challenging movements you had, and what did you do to adapt to that challenge?
Yeah, so the most important thing of this transition is the opportunity. So as a C++ developer, and I wanted to work on more complex systems, and I got the opportunity to move from building GIS applications on handheld devices to payment applications on handheld devices. Now, when you do this kind of transition, suddenly you are into a world where every line you write is impacting the funds movement, money movement. And when you realize that, you get a responsibility. So that responsibility is an interesting responsibility because you need to understand where the money comes from, where the money is going, and how my code is impacting that. Yeah, so at this point of time, it's only GI system maps. So somebody is viewing map. What maximum will happen is they will lose some path, they will come back and then they will start again. Here, it is not like this. When you are talking about fintech moving the funds, every line of code moves the fund in wrong way. It's a big penalty. So that is a big realization that I had when I started working on the code on the handheld devices. And when I started moving on to the handheld devices to gateways, the responsibility increases. Then when we start working with banks, when we start working with networks, the responsibility only increases as you move on and start working on different components of fintech. So that realization that came into picture. And this is much more regulated industry than many other industries. So that's also put a lot of responsibilities that we'll talk about in a moment, about the trust, about the compliance, and that you have to think it from the day one. It cannot be an afterthought. Yeah. So that is two things the increasing responsibility, and this wider world of compliance that changed me.
Right. So there's a shift from internal regulation to external regulation.
Yes.
And the implications of a defect is too high in terms of financial losses. So you mentioned about the regulation, Krishna, and you have worked across Asia Pacific, Europe, Africa, Gulf. How do you see difference in the regulation when it comes to finance and fintech now in across these countries, and how is India placed today, and how have you seen the shift in last few decades of your working?
Right. When I started the initial fintech payment applications on the handheld devices, it was not as secure. To be very open with you, it was pretty unsecure. You could hack into uh, the device and get the data. Frankly, even the card is not secure, or the card was not secure. You see the magnetic stripe behind, that is readable, that you can read today as well. So in one sense, we are keeping it backward compatible, but there are additional security mechanisms put on to that. But at that point of time, there was no additional security. So initially, the whole security mechanism started from Europe with EMV, Euro Master Visa, starting a conglomerate, a regulatory body who will control how the security of the payment transactions would happen. And that, fortunately, I used to work in the UK at that point of time. This was back in 2000. I used to work in the UK. And that time it evolved. And 2003, 2004 were the times when the first EMV solutions went live. And I was one of the team member where we made the system live in one of the supermarket in the UK, which is EMV compliant. Yeah, so that transition from pretty unsecure, unregulated, or very, very loosely regulated to very strict system, that journey started at that point of time, around 2003, 2004. And then more and more regulations and security standards came along, and it is pretty tightly regulated and secure today as we speak. Yeah, so that journey that I started from UK. Now, this journey is separate for each of the country regions. So we whenever we do any internet transaction, we have OTP comes into picture. We get a mobile OTP on our mobile, and we put the into a web page when it pops up and the transaction finishes. There are still countries in the world who do not have this concept. Yeah, and believe you me, many transactions in the US happen without OTP on the e-com side. Yeah, so there are different ways different region look at the security. As Europeans started to evolve this initially in back in 2003, 2004, the rules and regulations are pretty stringent in Europe than in the rest of the world. The good thing about India is India followed immediately behind. So we adopted EMV standards pretty early. So by 2008, 2009, we had EMV standards. EMV cards started to come into picture. We had chip and pin transactions. Pin came into picture. Then we had even 3D secure, the OTP, mobile OTP comes in whenever you do a transaction online. That came into picture in 2009 in India. So we followed, as in India, we followed all these regulations. So in India, we were pretty secured as far as the transactions are concerned. Although we didn't have too many apps by then because the apps ecosystem didn't evolve. Even net banking was not a very prevalent, not many people used it, but it started. So as far as the India is concerned, there was set of people who were focused on getting this regulation, getting the financial system secure. Yeah. Similarly, Middle East also followed. So there are Middle East countries who are secure enough. Similarly, Australia, New Zealand, they followed chip and pin. So they are all EMV countries, like in Europe. They went first. They were one of the first EMV countries adopting EMV standards. Yeah, US was the last, or US was the later stage. US adopted EMV standards. Yeah. So different regions, different standards. Essentially, the goal is the same: move the funds. Every country has their own standards, own protocol. Every country has their own standards for regulation, as well as the global standards. So there are some global standards, like I said, EMV, similarly security standards of PCI, but there are local standards like we in India, we have RBI governing some of the transactions. Similarly, every country has their own central bank guidelines to drive the transactions. So there are transactions processed in every region and every country for the convenience of people, slightly in different variants with their different flavors of standards. But overall, the payment is the same. So we
Krishna,
call it same, but different.
today it has become so easy for a consumer to make any transaction anywhere in the world, and there are layers of it. What I understand is the embedded finance we are talking about today. And I'm sure as you were explaining the journey from 2000 EMV in Europe to today where we are, I think to make it simpler for consumer, there's a lot of complexity which is happening in background, Krishna, right? And what I understand that embedded finance is about if I'm using one app for ordering, let's say a car, I'm just taking, and it gives me an offer. It gives me an option of availing loan also through that app. So now loan processing will be happening in a different application, maybe in the background. But then for me, it's very seamless. And this is creating the original question what we had: who owns the trust, Krishna? Right? So how has this changed the world of fintech today? So, in your work with the founders today, or maybe the large institutions, the CXOs, what problem you are solving for them? What the blind spots you help them to discover?
So as I said, when we started, there are lots of integrations, lots of things happening. For a consumer, there is only one app, as you said. There are certain number of transactions, financial transactions you can do. Yeah. And behind the scene, there might be multiple entities. Generally, for a basic fintech application, there are three entities that are visible or not visible, but they are directly involved. Number one is the platform owner. So if you are buying a good, the e-commerce platform owner is the platform owner that is responsible who provides the app to you. Or if it is an insurance provider, even if it is a stockbroker, everywhere the fintech comes into picture. Yeah. Now, if you are doing a bill payment over a e-commerce channel or for booking tickets for flight, everywhere the fintech comes into picture. So the platform owner is the main interface for you. Secondly, the platform owner moves the transaction from its platform to the PSP or payment service provider. So payment service provider in India, payment service providers like Paytm, PhonePe, Razorpay, Pine Labs. So these payment service providers take the transactions and route the transactions to the specific networks, whether it's Visa card, Mastercard, Rupay card, and then through that it goes to the issuer of the card. So if you have a card from HSBC, and if it is a Razorpay that you are looking at the checkout page of Razorpay, then Razorpay routes it to the acquirer, which might be ICICI, and then the transaction is routed from ICICI to Visa, Visa to your issuer HSBC, and then the whole thing comes back. So that is a basic transaction flow. So as far as the platform is concerned, it's the PSP, payment service provider, and the bank. Those are two major players in the financial transactions. Why PSP? Because that routes the transaction. Why bank? Because bank is eventually going to pay. Now, when you see, this sounds very elaborate, but this happens in milliseconds. Yeah. Now, when we want to do more things, when you want to focus more on the speed, we have to look at things behind what is happening. So, for example, there is a cryptography happening because there is a security. You cannot pass the card number as it is. You cannot pass the PIN as it is. So, there is a requirement for cryptography. So cryptography comes at a cost, processing cost and time. Secondly, there is a masking of the data. If you have address, name, it should not leak. So we have a DPDP regulation today. Similarly, it has been there in Europe called GDPR. So that prevents PII leak, the personal identifiable information should not leak. So that is something that we need to focus on. Now, what happens is whenever there is a, as I was telling this, silently failure. So there are frictions happening. So sometimes the risk engine doesn't work. Sometimes the fraud check doesn't work as expected. Still the transaction goes on. Sometimes it is catastrophic that the transaction gets aborted. And then in that case, sometimes the money is gone from the bank. So that's where the consumer feels the heat. And that's where consumer tries to connect to the platform first. And then what happens is platform may divert them to bank or maybe PSP and so on and so forth. So age-old times, we would have seen cases where we have put the card in ATM, but money doesn't come, but it is debited from our account. Yeah, so now we have to keep calling them. Sometimes you have to give the letter to our branch that so and so happened. So like that, today, if there is an issue, the request might ping pong between the entities as we discussed, and it might take some time to resolve it. So this is where the trust factor comes in. Yeah. So in striving for the speed, ambition, we might be compromising some of these ecosystems. Yeah, so that's where I come into picture where yes, speed is important. How do we optimize it for speed? But at the same time, we do not compromise any of the compliances, regulations, any of the elegant failure and elegant error handling so that troubleshooting is easy. So one side we are talking about masking the PII information, encrypting the card. On the other side, we want to make sure the transaction is still traceable, still auditable. So we can easily find out and troubleshoot what happened, where it went wrong in like a second, should not take like days to find
Yeah.
out the issue. So that's where I come into picture. I have been involved into lot of gateways globally from US to Australia, and troubleshooting, building the system is one part, but it with the sustained quality and performance is the key to the success of these payment systems or any fintech systems. So that's where I come into picture. How we can build it in such a way, how we can architect in such a way that we have the transaction auditable as well as the speed is not compromised.
So balance of speed versus masking the information, PI, right?
Yes.
And then able to trace if something breaks in the journey, putting it all together,
For
Krishna.
example, if you find your transaction failed and certain app, next time you will think twice, thrice whether I should be doing purchase from that app or I should go for another app. Yeah, so that loses customer, that is losing trust. When in fintech, if the transaction take a fraction of a second more, but that gives me confidence and it doesn't fail, that's something that we need to find the right balance.
Yeah, I think that's a very key point, Krishna. It's not only it's part of the customer experience, a very key part of the customer experience. And even today, in some of the transactions, we still get to hear. So let's say, and especially in the refunds, Krishna, when I
Mm.
have to get a refund, even from a global vendor, they'll typically see you, sir, it will take 3, 4, 5 days to get back into your bank, right? And then
Yes.
I have faced, and this is with some of the top organizations globally. They said, "Sir, from our account, it has been transferred back. You check with your bank, and then you send that to the bank, and then so while the payment has become so smooth, why do we hear these 4, 5 days for the refund, Krishna? Is it more of a technology problem, or is more of a by design?
Yeah, it is by design, I would say, because refund is a very sensitive process as far as fintech is concerned. Anybody cannot refund. You have to have if you are refunding on a website, the website that page has a elevated role to do a refund. Yeah, you cannot do certain refund. So there are certain situations where refund is very, very critical. Now, that is one thing. Other thing is the regulations. There have been cases in past where the money laundering happened through refund process. Yeah, so anti-money laundering systems kick in when the refund is there. So there are regulations, there are restrictions. So there are some still processes where you have to do a manual submission, you have to have paper receipts. So there are regions where there is a strict regulation to store those receipts. That's where you see that delay. But refund, I understand because
Got
refund
it.
is an exceptional process. So we have to make sure what happens 80 times out of 100, that should be smooth. But there are things because of the nature of the business that we have to live with it, but that happens rarely.
Got it. I never I never had that view on the refund. So thanks for bringing that up, Krishna. I think that will be useful for our audience also. So Krishna, you have seen the journey, right? From EMV era to today era, FinTech 3, FinTech 4, we are talking, and maybe beyond. I'm sure you would have seen inside out and outside disruption also, outside in disruption also, both way, right? Now, what is the message you would like to give to our audience who could be someone, a senior professional, say 15 years and more in finance industry or any of the related industry? How is this FinTech 3, FinTech 4 going to change their career progression? What should they be focusing on? Technology, domain, or something else?
So fintech, by definition, we have to focus on domain. So you have to understand how this flow happens and what is the implication of this flow. So who gets money when, how that flows through multiple entities as we discussed. So understanding the domain, understanding the flow. If it is a stock market, Indian stock market is moving at light speed nowadays. Yeah, the recent last month there were changes. Now there are terminals within the NSE, so the transactions happened at a nanosecond speed. Used to take milliseconds, seconds. So now we are closer to world economy than before. So understanding the flow behind, the business logic behind, understanding the domain becomes a crucial part. Technology, on the other side, one has to understand the engineering part of it if the person is inclined to work in the engineering. Because with the advent of a lot of technologies, the development slightly has become easier. That we'll talk in AI as well. But if you want to get into engineering, you need to understand the basic architectural concepts, architecture paradigm, different architectural patterns, design patterns, and where to use what. As far as academic is concerned, people learn a lot, but where to apply what and why is something that the business tells you. So if it is bank grade database, you tend to go for Oracle. Yeah. So this kind of decision takes themselves, you don't have to worry about it. But as far as engineering architect of your application, you need to focus on how the architecture is built to sustain and to take the load. It's not only, as we said, it should not only work, it should sustain for a longer period. Because we have seen apps go, apps come, apps go, apps come, apps go. There are company startups bring their app, they advertise, but after a few months, the app is nowhere to be found. Now, that's the reason behind it. The sustenance is important in the world of fintech because to get the application regulated, get the application complied with the fintech regulations in itself is a hard work. And if you have done that, sustenance is important, performance is important, and if there is worst case, if there is a failure, how to get out of it? Like we talked about the auditability of the transaction, traceability of the issue. So those are important things to be found out immediately so that we can communicate to the customer. At least if you see a failure, like you mentioned about a refund case, if somebody is in constant communication via SMS, via email that this is happening, you get a trust
Yeah.
building. Yeah. So we, as far as the end user is concerned, we need to be making sure that end user is in a position where they can trust our platform. They can trust our app. Sometimes no news. And that kind of makes customer worried. Yeah. So now with the quick commerce, you
Hmm.
order in 6 minutes, things are at your doorstep. and you know where the rider is. Imagine this is 5 years back or pre-COVID. We have no clue where the rider is, what is happening, when it is going to land at your doorstep. So the predictability is increasing and making the customer trustworthy. That is the crux.
So
So
Krishna, then if I, sorry.
as far as the professional is concerned, if it is a senior professional, they need to understand the domain. If they want to get into engineering, they need to focus on architecture and sustenance. How the system will sustain, how my app will sustain, how it will process the transaction, but it will not fold.
So then to summarize, domain for the flow, that's a very visible customer experience all the time, right?
Yes,
And then underlying is the technology architecture for the sustainability, reliability of the platform. Definitely, then the complexity of regulation of multi players come into picture. How do you? So a lot of those things come into picture. Interesting. Thanks for that. And someone who is watching this just from the college days and getting into a career and want to get into fintech, what would you suggest him, Krishna?
so they need to be curious. So what is happening? How my transaction is being processed? That is something that is people need to be curious. Today people do transactions, stock buying, stock options on the app. They need to start understanding what actually happens behind. Yeah, so they need to start asking questions. And today knowledge is available easily. If they get understanding of the knowledge, then building those system or involving in building of those systems become that much easy. Technology will come and go. The cycles are faster now, but there will be tools to build whatever you want to build, but you need to exactly understand what to build.
Yeah. So that brings us to the AI intersection, Krishna, right now. So what I understand, domain then becomes kind of primary. Someone in fintech needs to understand the domain. There's no second say, and it's becoming more and more important because technology somewhere get commoditized, right?
Right.
More so with the AI, right? So it becomes very critical. So now, how is AI impacting the fintech, and how are you leveraging AI to create more value for your clients?
So I would say AI as redefining the whole way of working, not for fintech, for everybody, as you
Yeah.
know. So it is definitely impacting fintech. Now, there are two aspects to AI, I would say. One is building fast, failing fast, running fast using AI is one way of doing it. Whether it's right, wrong, it depends on who is doing it. But the second part, which is more important, is the governance of AI. So I see governance of AI in three parts. One is an explainable AI. So whatever you are doing, you should be able to explain. So if you are using AI to make a decision, why AI had made this decision? If you are using a LLM, if you are using an agent to make a decision, we need to have full traceability and explainability why that decision was made that way. Second, responsible AI. That is another important point where the AI is responsible for making certain choices. Now, whether the responsibility lies with AI, whether responsibility lies with the trainer of the model, whether responsibility lies with who is using the model, that's something that people are building governance. There is no set rules at this point of time. So jury is still out on how that is going to work. Now, responsible AI is important and every industry. So for fintech, we need to think of responsible AI for ourselves. So when you are talking about the system, we need to talk about that particular application. How do I use? How can I be responsible? Whether it's a regulation, whether it's a compliance, whether I am not leaking the data, any PII through AI, whether I am not leaking any secrets. You have seen API keys being leaked over AI models. So we need to be very responsible while using the AI. So that is a responsible AI. That's the second one. Third one is a interesting one. I feel third one is the make or break of AI for any system, especially fintech. The predictability. Now, predictability has two aspects to it. By design, by definition, AI models are probabilistic. They are not deterministic. So when the probability comes into picture, a single signal from here and there changes the probability. In fintech, we rely on deterministic systems. So it has to be deterministic. So you cannot use the probabilistic system as is in fintech decision. So you can use AI for decision augmentation, but not for fully decision making. So you have to have a deterministic system. Some signals you can take from AI. You can augment it using LLM model, but decision making, you have to have deterministic. So that is a predictability part of it. Second predictability part is the cost. Now everybody is talking about the cost of AI. Whether you are using a hosted LLM, whether you want to host it yourself, LLM models. Now GPU, that brings in picture the hardware, the GPUs and the RAM. Cost we don't know. How fast it is going to refresh, we don't know. The GPU today may not be relevant GPU after 6 months. So what do we do? Refresh everything. Maybe another model comes in 6 months that will not at all run on the GPU. So there is a hardware factor. Another thing is, if you don't want to go there, you have to use the cloud-based models. Then the regulatory comes into picture, the responsible AI problem comes into picture. Still you are responsible, you anonymize data, use the cloud model. But still you are not sure about the charges. You are not sure about how the charges are going to be there tomorrow, the day after. Because every model, so you know the biggest AI company, the founders keeps telling, even the $250 model, $250 per month subscription doesn't give me profit. So if that is the situation, everybody has to accept that this is AI is kind of a initial stage where everybody kind of hooks up onto AI, then eventually you have to pay for it and heavily pay for it. So we have to be ready for that predictability. So if you charge your system a subscription fee basis of the AI model that you use, tomorrow the AI model costs more, then your subscription fees will go for a toss and then people will leave. So there this predictability comes into picture. So that's a third AI predictability. So these three aspects, the explainability, the responsibility, and the predictability. These three are very key aspects of AI for fintech. And everybody who is getting into AI and fintech, they need to focus on all these three things. Individually, they are not useful. If you want predictability, you have to have local model. You have to have GPUs. If you cannot afford it, you have to go cloud. Then the responsibility becomes a problem. Whenever you are building an architecture, you have to worry about the explainability. Why a certain decision taken? Because there are so many biases. There are situations where even we were in conference, I think 6 months back, where a lawyer was explaining a case where the recruitment happened, which was completely biased. And it was only males were hired and females were not hired. So these are biased models. So that is a completely blatant explainability problem. Why this decision was taken that way. So there is no traceability in that model. So we need to make sure that traceability is there. So AI is good. It will expedite some application development as long as we have the right mind to it as far as explainability, responsibility, and predictability is there. You are okay.
A great point about the cost. So that's the business model complete, Krishna, right? And if that has not been thought through for a little bit long term, I think long term is changing nowadays. It's no more 5 years, but at least for a year or 18 months, I would say, then you're right. There might be a disruption who could use what's going on at that point of time and could disrupt you. So that's a key point. So AI today is helping fintech in application development. Is it helping in the technology layer also, Krishna?
It is. It is helping. So as we were talking, getting a domain knowledge, AI is helping. You can discuss with AI. Building prototypes, AI is helping. Up to certain extent, building application using vibe coding, you can do it. Only thing is explainability comes into picture. Why the code is written in such a way. So as long as the person who is responsible for delivering understand why the code is written in such a way, that is a good model to work. But with so much of proliferation of vibe coding, people are not aware that they cannot explain why the code is written in a way. So that is a bigger problem. As far as the agentic AI is concerned, I like agentic AI because that gives you some part of automation quick than whatever we used to do earlier. So that heterogeneous system we can connect, and AI can help to connect some part of it seamlessly, and that's where agentic AI would be useful.
So, Krishna, are there any use case for Agentic AI you already implemented for your clients?
So we are in experimental phase currently. So a reconciliation is something that we also working on, where there are different format files come from different areas. So detecting which format it is, AI can be useful. You have to use deterministic models along with AI to make the decision, actual reconciliation. But formatting, writing the code, building the initial model, that AI helps. And especially what we talked about, communicating with the different entities. So that the AI automation helps there. We know exactly which entity to communicate to. So we can have automation build along with the AI agents to communicate to the this say customer that this is happening over the email, to say, for example, to the bank, to the platform, this is happening. So early warning signs, whatever I was telling, silent failing, these AI agents can be used heavily to notification purposes, to identify the silent failures. So to build models to identify what are the silent failures and notify immediately the relevant entities so that they can be acted upon.
Maybe I'll get a notification next time my refund is stuck somewhere, right? How much time it's going to take, Krishna?
Absolutely. That would have helped you that next time I can use the same system so that it gives me notification. That
Yeah,
builds a trust. Maybe you even don't bother to read the whole notification, but at least
true.
you see somebody is communicating with me.
Uh, Connecting Fintech, right? So tell us more about it. How did you got the idea of writing a book on fintech, and what's the plan forward?
Yeah, so basically, around just before the COVID on start, when the 2019 COVID first lockdown happened, people started to pursue their hobbies sitting at home. Some people started playing games, some people started cooking some coffee, new types of coffees. So at that point of time, I was doing some blogging. So one of my friend, who is also an executive coach, suggested you should write blogs because you should write book because blogs were easy for me. Writing is not as difficult. So he said, why not write a book? And what I was writing was about fintech. So what I can write about what I know. So that's where I said, okay, let me start collecting some of the blogs and start to see how we can connect into a book. And that's where book concept started. And during the COVID period, where I was sitting at home, weekend mornings, I used to spend 3 4 hours to write chapters, and suddenly it kind of hooked on. And that was a really, really enriching experience. It's like a meditation when you're writing your ideas, putting your ideas, and there was no AI then, no chat GPT. So we had proofreaders used to read. There were publishers, publishing team that was reviewing what is happening, diagrams. So I had to make my own diagrams. Then we had to have the workshops. So the 5D model, the cover page, the title, Connecting Fintech. We had to go through a lot of workshops to come to these concepts. So that was a very enriching experience. And yes, the publishing is kind of strenuous, but overall process of writing book is very, very, very nice. Everybody should do it who has inclination of writing. So that's where the whole book writing came into picture. And that for me, it was first for me, and then with the publisher, with other people in fintech, I had to dumb it down a bit so that everybody can understand it. It has wide audience. So that was useful as well.
Yeah, true. And I do have a copy with me also, Krishna. So Krishna, I think let's now get to, as we're moving towards the conclusion. We are working with startup founders today, right? Helping them on fintech. And in my work with the startups also, I see a lot of startups now coming, building on AI, right? And the focus is the AI, to build something on AI quick, fast, right? Which so that we don't leave behind the bandwagon, to say. So from your work, what message would you like to give to the startup founders who are moving towards product market fit or product market fit to scaling in fintech world, right? And from your knowledge of fintech plus AI, agentic AI, what they should consider while they are building their product?
Yeah, my answers may not be at all compatible with the thought process the new startup has, and which is absolutely fine because the new age people, new age founders have a different vision of the world, different view of the world. My vision is a bit different, bit conservative, you can say, which is fine. Both views have their own places in the world. And the way these founders are doing, some founders are exceedingly smart and they can build systems that can sustain. Some founders find it difficult how to fit, as you said, product market fit. No, I don't understand that completely because there are so many nuances into product market fit. So, what is your idea about? What is founder's idea about a certain product that they want to build? It's just not for sake of AI. We are giving value. First is value. What is your value stream? Are you able to give the value to your end user? Number one. Number two, can you give the same value over a sustained period, or it is too transient? So if there is a market situation changed, the product would no longer exist. Is that kind of a product idea? Yes, there can be business. So it's like some stocks can go up very in small interval of time and people earn a lot. So those kind of things happen. So that's a good idea as well. But that's not my cup of tea. So my cup of tea or my thought process is, have you built your value stream in such a way that it gives a value to the end user in a sustained manner, and you can support the application, app, the ecosystem in a sustained manner with the entities, because in today's world you cannot do everything on your own. You have to rely on all other entities. So what are your partners? Are they having similar conviction as of you, or at least they are subscribed to your idea in such a way that they can support you? If that is the case, then definitely founder should be building. Now we use AI to build the product, but again the explainability part come into picture. It's not blind, because sometimes AI is a driver that is driving your car. You are in the back seat. You don't know where it is going. Is absolutely fine because you are not driving and it is super fast. But how can you be sure that that is the destination you want to go? So that's where the whole AI conversation comes into picture. They can build it as long as they understand what is being built. Secondly, the idea, as I said, a value stream has to be clear. And the most important is regulation. What I see when I see and meet founders, they do not understand the regulation. They do not understand the security. They need to start understanding the security, the regulation, the compliance. DPDP, now we have been talking about it. How many people in India are aware of DPDP? The regulation is notified last year, November. Yeah? Now, everybody in India need to be aware of DPDP. What is their right? Simple example, when you go to a coffee shop, they ask your mobile number. I say I will not be able to give mobile number because government has put a DPDP regulation and it says to me that I can't give your mobile number. Then the confusion comes into picture. How I generate the bill? Yeah, actually a coffee shop asked me, how do I generate the bill? So I said, you give me a bill by hand, no problem, but I will not give my phone number. Yeah. So we need to be aware. Everybody has to be aware because essentially it's your responsibility to to secure your data. How much regulations come, how much RBI put restrictions. If you are ready to give your data freely to everybody, then you cannot safeguard yourself. Yeah.
Yeah.
So that is important. You have to keep your details. Aadhaar card. Now, Aadhaar card is also tokenized. You can give the token. You can give mask Aadhaar card. People do not accept it. Then you have to ask them why. So similarly, founders need to be aware. I'm talking about common man. Founders need to be aware 10 times different aspects. DPDP, there is a principle that role has to be taken by founder. They need to understand what data I'm handling. So that is most important. Every founder need to be focused on all these aspects. If AI, predictability is most important. Predictability of how AI is using, how the cost is going to go, that is most important. So there are multiple aspects founder need to be worried about.
Yeah, so keeping the trust in tech where we started from, Krishna, is the key in fintech, right? So
Yes.
one last question I would like to ask. Fintech 4, that's the next thing, right? Krishna, I think we are in Fintech 3 now and Fintech 4. So what is one opportunity in Fintech 4 on which someone can build a new startup?
Yeah, that's a good point. I don't know. The real answer is I don't know because the things are happening as we speak. Embedded finance is there, Fintech 3.0, where you can actually buy goods in ChatGPT. You can add to your Amazon cart. You can pay by Razorpay using your UPI ID there and then whenever you are in ChatGPT chat mode. Yeah. So that's the extreme that AI has gone at this point of time. Now there are other things that are happening where there is biometric connections as well happening. There is a Neuralink that is that is happening. Yeah, so you heard of Neuralink as well. So Neuralink along with AI will be even Meta goggles. You have seen the Ray-Ban goggles. So these things are going to impact. Now, there will be changes to the way biometric integrates with fintech. It has not been as successful as people would have wanted, but these things, new technology is going to make sure that biometric comes into picture. Now, even there are conversations in parliament where whenever you are going for voting, you take biometric. So the conversations are on for biometric, and this is not in India, this is world over. But now then comes into how the data sovereignty, data security comes into picture. Yeah, so biometric using the smart devices into fintech world along with AI, there are going to be lots of opportunities.
Thank you, Krishna. It was great having you today with us.
Thank you, Chetan. It's always pleasure to talk to you.
Thank you for watching this episode all the way through. The Impossible Transition podcast exists to bring you real stories of leadership transition and the systems that help leaders scale their organizations. Each episode, one system, one story, one shift. Tell us, what system do you want insights on next? Drop it in the comments. We would love to build the next episode around it. Subscribe so you never miss an episode, and also share with a leader who need to hear it. Until next time, keep making impossible transition.